Well, so I think there's a good question to conclude on, and I'll give you another plug. We will switch to Pigeonhole here in a moment, although I think Ross and I are both going to make predictions before we wrap up as we look 1 year ahead. But let me touch briefly. I do think it's useful to step back sometimes, and I think we get so caught up in the craziness of the crypto markets, and we lose sight of big picture. What problem are we really trying to solve at a macro level? And for Ripple, that always comes back to a common three words as a refrain, and it's really about enabling an internet of value. I moved to Silicon Valley 21 years ago in the earliest days of the internet that we all enjoy today, and the internet as we know it today was really about data interoperability. I can access any piece of data for anywhere in the world, whether it's a piece of information, whether it's a number. That data interoperability has really catalyzed lots of positive momentum for the global commerce and even in global society. When we talk about money interoperability or value interoperability, that doesn't exist today. And if we can make value networks interoperable in the same way data networks are interoperable, I think there's a lot of secondary and tertiary impacts that are hard to predict, but could get very exciting. So in the same way that 21 years ago, I don't think we could have predicted that you could take out your mobile phone and click on your Grab app and have a car waiting for you outside in seconds or minutes or fast. It's hard to predict exactly how some of the dynamics of dramatically improving the speed and dramatically lowering the cost of payments is going to have in terms of changing society. One of the things I'll comment on is there's close to 2 to 3 billion people who are either unbanked or largely underbanked in the global financial society. These are people who, if we can bring them into that community, they have great benefits to that. And there's a reason. Banks don't serve the underbanked community because they don't want to. They don't serve them because they can't do it profitably. Banks are profit-seeking engines. And if they can serve a customer profitably, they will do so. And so I think blockchain technologies have the opportunity by reducing friction and reducing costs dramatically to totally change the nature of how payments flow. I'll give you one quick example, which is kind of crazy, I admit, is a lot of us don't think about, here in Singapore, I believe you get paid once a month. In the United States, you get paid once every 2 weeks. Has anyone ever thought about why you get paid once a month or once every 2 weeks? It comes down to the friction of payments. And if we can remove the friction of payments, why can't you get paid every day? Or even more crazily, why don't you get paid every hour or every second? You could have a stream of value showing up in your whatever repository of value. Now, why you need to get paid every second, I'm not sure. But I do think there's a lot of dynamics that have been built around getting paid every 2 weeks or getting paid every month. And as we remove the friction of payments and make that dramatically easier, I think you're going to see secondary and tertiary effects that are very difficult to predict, just like we couldn't have predicted Grab 20 years ago. All right, so with that, before we go to questions, a prediction for what we'll be surprised about 1 year from now.
I think in making predictions in this space, you should probably think of the most outrageous thing you can possibly say, because it'll probably come true within the next 12 months. But I'll be a little bit more conservative, I guess, in my prediction. I think if you look at the work of jurisdictions in designing law and regulation around crypto assets, I think, or fintech more generally, I think it's certainly the case that the level of cooperation and the depth of the conversation will be much greater in a year than it is today. I think there's so much work that's being done at the international level on these issues, not only by the IMF and the World Bank, but also other organizations that we work closely with like FATF, like the Financial Stability Board or the Basel Committee. Basically, everybody is focused on fintech, thinking through its potential and thinking through regulatory approaches. And this is going to certainly deepen. I think from the perspective of the IMF, I think our engagement with our members will continue to repeat a phrase, deepen. I think the Bali FinTech agenda is something that we regard as a very important development that will help us work closely with our member countries. And I have to say that in all this work, one can't underestimate the leadership at the head of many of these institutions. Christine Lagarde, our managing director, has really been a driving force in our work on fintech. And of course, she'll be a keynote speaker here on Wednesday. But all this to say that, international cooperation is essential, and I think that cooperation is happening in ways that will result in greater cross-border initiatives and, as I say, a more effective conversation about regulation.
So my prediction, about 1 year ago, I actually was here at the Singapore FinTech Festival, and I got in trouble when I went back to the office because the PR team said I had overstepped by predicting that within a year, I predicted that financial institutions like banks would be using XRP in their payment flows. And that was a year ago that I made that prediction, and I go back to the office and everybody was like, Brad, you're not allowed to say things like that. It turns out I was right, which I remind the team of. So now as I look forward a year from now, like what are the things that are hard for us to imagine being true? And not even specific to Ripple or to XRP's community. I think one of the things that will surprise us a year from now is that banks will be custodying digital assets directly. And I think right now we think about that and think, look, there's no way that's going to happen. They're too conservative. And I think what you're seeing is, two things happening. One is banks are seeing that a lot of money is being made by digital asset exchanges globally, and banks are profit motivated. The second, and as we've talked about up here, certainly Ross has made very clear, is regulatory clarity and regulatory frameworks enable banks and financial institutions to lean into these markets. And I think we will surprise ourselves by this time. And by the way, I'll also predict that it will be banks in the ASEAN markets where there is this regulatory clarity and there is a lot of progressive forward thinking. They'll be the first to actually allow for crypto assets custody in their accounts.